Welcome back. You're watching the ET Money Show with me, Kavita Thapliyal. Now, when it comes to investing in real estate, we tend to believe that buying physical land or property is the only way to invest in real estate. But did you know that you could invest in real estate without owning any piece of real estate? Now, this is where REITs or real estate investment trust comes in. On the ET Money Show, we take pride in simplifying personal finance of our viewers. And so today we will simplify and tell you everything that you need to know about REITs. Let's welcome on board Prasad Sawant, Head of Advisory, IIFL Securities. Prasad, good evening and welcome to the ET Money Show. And thank you so much for talking on REITs today with us. And we would want you to break down the concept of REITs and how, without owning a physical land or any physical property, you can still have real estate as a part of your financial portfolio through REITs. A lot of people are unaware about it also because we don't have a lot of awareness on REITs. And we also have, I think, not more than three type of REITs so far in terms of investment. Tell me one thing, Indians, real estate and investing in real estate is an integral part of our financial planning. In fact, it's also looked as a backup source of income for a lot of Indians. Now, the concept of investing in real estate without actually owning it sounds new and tricky for a lot of Indians for sure. Explain to us what kind of property or real estate we are talking about when it comes to REITs. What kind of physical land or commercial, residential, how exactly without owning a physical land you can still be a part of it and it can be invested and made a part of your financial portfolio, Prasad? I think you're on mute. I'm sorry, Prasad. Couldn't hear you.
Yeah, sorry. So good evening, everyone. So today we are talking about REITs. So REIT is what? Real estate investment trust. To simplify that, I will tell you we all Indians know gold. We are having the highest consumption of gold across world. So buying a physical gold and buying it through sovereign gold bond or else buying it digital gold, the similar way you are having real estate properties over here through REITs, and these REITs allow you to get the regular income the way you can get it through lands and commercial properties by renting out those properties. But in case of these lands and commercial properties, you don't have enough funds in hand, or say lot of transparency issues are there which can tackle with this kind of REITs. So in 1960, this is there in 1960s with the other global markets like US. But over here in India, SEBI started drafting papers for these kind of investment trust since 2007. And we got our first REIT listed on exchange in 2019, which is of Embassy Office Park REITs. So over here we are talking about the lands and also commercial special economic zones, commercial buildings and special economic zones in which we can actually invest, but without taking much of a risk, and a lot of liquidity is available. Secondly, you don't need crores of rupees to invest into it, since these are under regulation and framework of SEBI, as all these REITs need to get listed on the exchange. So once it gets listed on the exchange, after that you are going to you can trade the way you are trading in equities and also other exchange traded funds. So as I said, that you don't need to have additional funds, or say you don't need to have the lot of paperwork and all. And as at the same time, since it has been regulated by SEBI, you are getting a lot of transparency, and you are also going to get benefits out of it. The way you get the rents from the rental properties. Similarly, you are going to get over here. So
Let's talk about it one by one. Okay, first let's talk about the investment amount. You said that if you don't have enough liquidity right now, but still you want to be a part of real estate or want to make it a portfolio investment, what will be the minimum ticket size? Because we all know, I mean, investing in physical real estate, you need lakhs and nothing. I mean, it all depends exactly in which strata are you investing, but. Investing in REITs, what will be the minimum to maximum? I'm sure maximum there is no limit, but then what's the ticket size from where it begins?
see, you can start off with 10 to 15,000 as well.
Okay.
Since these are these REITs listed on the exchange, we have three of them as of now. So first is Embassy Office Park, then Mindtree, and lastly Brookfield. So these three REITs are available listed on the exchange, and the price of one REIT is somewhere from 300 to
Yeah, could
350.
you explain the three of them who are already listed, which are available for investment?
Yeah, the first one is Embassy Office Parks, then second one is Mindtree, and lastly the Brookfield REIT. So all these three, like listed on exchange, the first one and first two are having approx market cap of 20,000 crores, and Brookfield recently listed, it has market cap of 8,000 crores. And approximately all these REITs are holding lands somewhere around 30 to 40 million square feet, and they are getting regular income by way of rent, which they are distributing to their investors as well. So these investors are going to get benefit of these rents in way of dividend as well as interest income.
Right. So earlier, Prasad, it wasn't 2 lakhs minimum investment amount. Has it been revised now?
Yes, it's been revised. Yeah.
Okay, so just 10 to 15,000 per month, and
Yes.
you get to invest in real estate. And the kind of
Correct.
properties are we talking about are commercial properties?
Yeah.
And
So
what would
those
be
are
the
commercial
value of
properties.
those properties?
So valuation, as I said, the market cap is 20,000 crore of
Okay.
this Mindtree and the Embassy Office Parks. So those are actually trading above their book value. So we can say their market value is somewhere around 15 to 20,000 crores.
All right. So now the question to you is, when you invest in the physical real estate, and if at all you want to make an earning out of it, you get a rental income. For
Yeah.
someone who's invested into REITs, how is that possible?
So you can invest through Demat account itself. Like if you are holding Demat account with any of the brokers, you can just log into your broker's account, and you can invest into these investments. So all these the first REIT got launched in 2019, second in 2020, and the recent one is Brookfield last year only listed on the exchange. So anyone having the Demat account, they can just log in and they can invest into it.
Tell me something about liquidity now, because investing in real estate, we all know that liquidity is a huge issue. But then if you're going through REITs, what's the flexibility that's provided over here?
See, since it is listed on equities, you can anytime buy and you can sell that unit any point of time. So the transfer along with transparency, the flexibility is also there.
Let's take this conversation ahead and tell me something. If at all one wants to make REITs a part of their portfolio, what should be the allocation?
That depends on the risk profile. Since this particular assets can give you returns in the range of say 7 to 9%. Since you require the diversification across all asset classes, this is one of the asset class wherein you can get some kind of say not exactly fixed, but some good return over other debt instruments. And uh, as I said, like over a period of time, it can also give you uh, benefit over other investments. Like since this particular investment is directly linked to the real estate.
Okay.
So we are waiting for one of the bills to be introduced in government upcoming sessions, so that if that particular bill gets announced, that would benefit to all these REITs, and we may see good upside in next few months or say in coming years.
All right. Now, I want you to compare physical real estate and equity, as investment options with REITs. Could you help us with the parameters if I talk about investment characteristics in terms of returns and tax implications involved? On basis of these three parameters and criteria, how would you compare REITs with physical real estate and equity market?
So physical real estate, we all know that a lot of compliance you need to follow, and on top of it, like we have seen recently, how builders are getting defaulted. So the risk is quite high over there. In case of physical assets, or say in case of actual buying a property anywhere across India. So that particular thing will taken care over here, since this is through a investment trust who is going to be like they have to follow a lot of compliances, and they are regulated through SEBI. So over here, this particular risk factor is not there. Secondly, a liquidity part is there. So liquidity, as we know, if I am owning a property, tomorrow if I want to get out of it, it is not going to be an easy task for me. Like I cannot directly go to any market and I can sell my property. Over here, the once you get this units of REITs, you can just sell it off the way you are selling your shares, mutual funds, and ETFs on the exchange. So transparency and liquidity, these two things are there.
Okay. Now, what happens when you invest in a physical real estate? Prasad, is you can go and check the property, and you keep a track of the valuation, the current market value. What happens when you invest through REITs? How can a unit holder, if I can call them that, how can they keep the track of the appreciation, and what kind of information, and what if you just want to come out of this investment? How can a unit holder be aware of all these things?
Yeah, so every unit holder is like a shareholder of a company over here, because since it is listed, SEBI has advised each and every investment trust to quarterly update on their overall activities, as well as quarterly they come up with their earning calls. Then half yearly they have to provide their market capitalization to the investors, and you can also track the regular results and research notes given by different brokers, because we also update on these REITs. Since only three are listed, it is quite easy for us to do some research on this and advise our investors. As you earlier pointed out, we need to diversify our overall portfolio. Then these particular investment will help you out to get the diversification, and all these data will help you out to understand how I'm going to make the appreciation by investing into these kind of investing into these kind of REITs. So a tax implication also you asked about. So over here, the dividends are tax free, interest is taxable, and the appreciation if you get in the units, then that will be taxable the way equity shares are going to be treated. Like 1 year, if you are selling it within a year, then 15% short-term capital gain tax, and if it is above 1 year, then 10% long-term capital gain tax up to 1 lakh rupees. So same implication is there, like shares, and they are following each and every aspect of normal corporates which are getting listed on the exchange. So it is similar to what you are going to track for the equity shares. The same way you can track it over here, and you can understand how you're making money or how you're going to get benefit from these investments.
One last question to you, since we've gone in such depth on REITs. Can we also invest in international REITs? Is that possible?
As of now, we cannot. International REITs are not allowed over here. I've seen somewhere around 730 listed REITs are there, and the market cap for them is somewhere around $11.84 million. So, but as of now, those are not accessible to us. Few of the few of the mutual funds allowing it, but that is very much limited. So if at all we try out to that, then the enough research is not available with us.
I'm sorry, there's one more last question now. I think this is the final question that I want to ask you. A lot of senior citizens actually, depend on their rental income. I know I've asked this question earlier also, but then specifically for senior citizen or for people who don't have a regular income, okay, depend on the rental income, can they make REIT as a part of their regular income in whatever financial scenario they are into?
Yeah, definitely. Why? Because we have seen India is we the kind of real estate market is there in India. Over there, we have really good. If you are selling a property, we sometimes get really good appreciation, but the rental yield is quite less. So as compared to that, if you're investing into REITs, then definitely you will get 6 to 9% of regular returns, or say regular dividends by way of interest from these leasing out properties by these real estate investment trusts, and which is quite higher than the yield you are going to get through the real estate properties, like residential properties. But in case of commercial properties, over a period of time, we are going to get returns. Last financial year was not good for these REITs, but from here on, we expect that 7 to 8% of returns would be there, which is quite good as compared to the current yield, rental yield available in India.
All right, so that will be all on REITs, and thank you so much, Prasad, for being on the show and helping our viewers with